Since 2008, the great financial crash, capitalism is on a drip feed. It's being kept alive through constant injections of money from the central banks. That has never happened before. It started in 2008. In 1929, it didn't happen. That's why all the banks closed down. So the banking system and the stock exchange had 12 years of getting used to, becoming addicted to, central bank money being pumped their way during difficult moments.
Hello everyone, and welcome to Real World Vision. In this video we are going to look at why we are heading for an economical recession. Since the start of the pandemic, the US, Europe and Japan central banks have created trillions of dollars to battle the pandemic crisis. That's the biggest money creation, done in the shortest amount of time from 2020 till now. Now the central banks are planning to stop the spending spree. This money was needed to support the world economy, which stopped for 2 months. They are spent into governments, banks, stimulus programs, mortgage backups, bonds, and supporting lenders. So this liquidity and the lowering of the interest rates made borrowing really easy and more affordable. The problem with all that is the money didn't really got into the right place. The major portion of that money got directly to the financial markets, which raised up the prices on stocks, real estate and other assets. So the result of all that is, more than 60% of this new created wealth got to the top 1%. That's why we have single fortunes of well above $200 billion, like Elon Musk and Jeff Bezos. For example, in America now, the top 1% have more wealth than the entire middle class. The last time the inequality gap was this proportionate was around the Great Depression. The rich at that time owned around a third of all world wealth, where the poor didn't had any savings. Sure, it was probably going to be worse if the central banks didn't got involved. But the resources didn't really got to the place they were needed, like creating new jobs, manufacturing goods, creating services, and overall increasing the productivity rate. The money got into the financial markets, which pumped the prices of stocks, cryptocurrencies and real estate. For the middle class now it's impossible to buy home in the city or close to it. Because bankers like the ones from Wall Street are now buying homes and are driving the prices up. That's just one example of what is really happening, but it's definitely not the whole picture. So, with the rising of the financial assets, the market evolved into a place for massive speculation and unsustainable growth.
So unsustainable starts to be part of this picture of a bubble. Unsustainable means that by the nature of the buying, whoever is doing the buying and how of that supply demand, that means that that won't be sustained and that produces a correction or prices going down. And then there's this speculative element. So one of those measures of the speculative elements is new buyers in the market. They're attracted in the market. You know, it's the sort of thing where, you know, you go to a cocktail party and people who are never involved in the thing are investing in it. And that could be tech stocks and it could be real estate and whatever. But, you know, they're drawn in and that there's big bullish sentiment. So everybody wants, not having these things makes you feel dumb.
So now the market is on an all-time high. Buyers put their newly created debt and savings to assets that really doesn't produce anything. A lot of people are now catching the wave, but the wave is getting big, and it's not going to get them anywhere. The growth is unsustainable. Sure, there is a lot of major technological breakthroughs like cryptocurrencies, AI, and batteries technology. But some of them are still ahead of this time, or are not used the right way. And this unsustainable growth is driven by an excessive debt, and this is the single biggest reason of why every financial crisis had occurred. So the biggest reason of why we are heading for an economical recession is unsustainability and speculation. For example, there are all sorts of overvalued companies, and some of them without any revenue or without any product. One overvalued company is Rivian, as they are valued at more than some of the biggest car manufacturers. Rivian market cap by mid-December 2021 is around $104 billion. Daimler, the car conglomerate that owns Mercedes-Benz, at the same time has $86 billion. Rivian at this moment has produced around 60 cars, while the German manufacturer produces more than 2 million premium vehicles per year. Sure, Rivian have a lot of pre-orders, but is definitely not near the top car producers like Daimler and Ford. Rivian is actually the good example. They have a good idea, and they have plans for the future, and some backup from Amazon. A bad example will be Nikola Motors. The company promised that they are going to revolutionize the truck industry with their new electric truck. The company in June 2020 had market cap of almost $29 billion. For a truck that was filmed on a gradient hill. After this they were charged with fraud, and now their market cap is around $4 billion. There is definitely a lot of demand for a good electric vehicles worldwide. But for now, Rivian is probably not worth $100 billion. And there are some other companies that really don't know what they are offering. All this market speculation is definitely not helping the world economy. Big amounts of capital are put into just several companies, and they have now more money that they need, or can use. The productive rate that these companies are going to make is going to be the same with fewer resources. And also fraud companies are worse, because part of their capital will just disappear, and at the end they don't offer anything to the public. This unsustainable growth is making the financial markets volatile and uncertain. At some point this will have a stop effect. The new liquidity and debt is going to stop, and the market will have a hard time.
Okay, so why are we in a bubble? This chart goes back to 1900, and the top chart shows debt to GDP. The bottom chart in the blue line shows interest rates, and the red line shows the printing of money, the amount of money that's going in. And so what you can see is when you have a lot of debt, like we have a lot of debt now, and there's a lot of increasing debt, and there's the hitting of zero interest rates in both cases. There's the printing of a lot of money. And that's a key element of the bubbles, because they have a lot of liquidity that comes into the market. And then there's a lot of throwing around that money in terms of bidding up all sorts of assets. So you could see that red line. You could see how when the blue line hits zero, the interest rates 1930, starting in 2008, and since we've had that movement. Then you see the largest movement now. So a lot of liquidity, a lot of debt financed debt monetization makes for a classic bubble.
As Ray Dalio had shown, a lot of things that happened around every financial crisis are repeating again. The creation of trillions of dollars will drive the prices up, as they are circulating for the same amount of things, like goods and services. Inevitably inflation will rise. This unsustainable growth will result in a certain correction of the financial markets. That is going to happen very rapidly, as panic will also increase the downturn. And if the markets go really down, financial crisis will occur. It happens every time since the 1900s. The stock market is the tool that shows us if a recession is underway. But it's really hard to tell what exactly it will happen. And the biggest problem is reducing inflation. For 2021, the US marks a 6.8% inflation. This is an all-time high for the last 40 years. Inflation is going to hit most the middle and lower class. People who work on wages and salaries, the majority of the population, as they don't have assets and cannot keep with inflation on their own. Imagine you rent houses. And next year, inflation rises at around 10%, you can adjust the price to what is necessary, and you can easily keep up with it. As if you are working, it's not likely to receive a really big raise, as the inflation affects also the expenses of the company, and profits are probably going to be less. Which is going to be harder for companies to raise a significant amount the salaries and wages of their employees. Also, if we look back in history, wages and salaries for the middle and lower class has been stagnant, and since the 1970s they measure average around 23% increase, which is just enough to battle the inflation rate since then. But productivity rate had increased, and the top 1% saw multiple increase in their wealth. In the coming years, inequality gap is probably going to get bigger. We live in time where the Matthew principle is thriving. Everyone who has more will be given, and he will have abundance, but the one who don't, even what he has will be taken away. As the rich gets richer and the poor gets poorer. But this is not good in the long term for the economy, as the wealthy people doesn't spend a lot of their wealth. And the velocity of money is lower, which will stagnate the economy. More than half of the world economy is driven by the consumer spending purchases from lower and middle class. And widening the inequality gap will further increase the possibility of a financial recession, as the top 1% is getting more and more from the rest, who are now more in debt than ever. This way, the backbone of the economy is put in a very tough position, with stagnant wages, increasing inflation, and speculation on assets prices, which further increase the cost of things like real estate. And this is all happening right now, combining with the pandemic, the depreciation of the US dollar, and the rise of a new superpower. We have checked all the boxed for financial recession. We have big inequality gap, all-time low interest rate, actually lower that has ever been. This is resulting in higher inflation, the biggest for the past 40 years. Excessive debt, the biggest that's ever been. Our time is really looking very similar to the Great Depression period. And the inequality and opportunity gap is the biggest since then. The rise of China, which is on the way to become the biggest world economy and challenge the US on every front. Great Depression is probably not coming, but a great recession and change will come. It is impossible to tell what exactly will happen in the future, but at the end of every downturn there is bigger uprising, which can create the opportunity to solve a lot of the problems that we have now. Thanks for watching. And I hope you liked the video. Please consider subscribing, it's really going to help this channel started.